Look, I think the most important thing on people's minds at the moment in the ABF market is asset-based finance going to be the next leg in the huge growth that we've seen in private credit? So following on from what we've seen over the last 10 years for direct lending, asset-based finance is now at the forefront of people's minds. It is a huge asset class, over 10 trillion in size. And really the question is how do asset managers like ourselves take advantage of the bank disintermediation that's continuing to happen? And more importantly, how do we gain those relationships with the banks so that we can make the most of the opportunity set and provide to LPs what they're looking for, which is, I think, diversification away from the direct lending part of the portfolio, and also access to that non-correlated downside protected risk. So I think that's really what's at the forefront of people's minds at the moment. Protection. And what I mean by that is the downside protected situation that we have in what is a challenging macro environment. Ambition. I think from all sides of the market, there is real belief in the growth of this particular sector and the attractiveness. And value. And again, that comes down to the relative value of this asset class in the current point in time with a great downside protected double-digit return. Look, it's a great opportunity to be with all our peers, all the market participants and all the LPs gathering in one area. I think it is a tipping point in the growth of the strategy. So hearing people's hopes, dreams, and actually what they're doing on the ground, I think is super helpful and super important. It's being with our friends. These are people we work with day in, day out. So actually getting some time to think of the market, what's happening, but also assess some of those outside features as well. There's a tricky geopolitical landscape out there at the moment. We've got a potential trade war starting. All these things affect the real economy. Asset-based finance is effectively lending to that real economy. So just taking some time to sit back with peers who have differing views on what the outcomes might be is super helpful.